Welcome to the December 20th edition of Markets Demystified from ESOP Advisor, LLC. I'm your host and the owner of ESOP Advisor, Jonathan Oden. This edition, Festive Fed, further hikes unlikely. When doves fly. The Federal Reserve meets every 6 weeks to decide on the path of monetary policy. During their most recent meeting, the Fed not only announced they were keeping rates unchanged in an unexpectedly dovish fashion, they also released a new set of projections that included lowering rates by next year. This was the first time since the beginning of the current historic hiking cycle the Fed has acknowledged they are discussing rate cuts. Fed Chair Jerome Powell said that inflation was cooling faster than expected, and 17 out of 19 Fed officials now expect interest rates to be lower by the end of 2024. Phantom recession. Although the Fed acknowledged that price pressures are easing somewhat faster than anticipated, the pace of disinflation is still stubbornly slow. The Fed does not see inflation falling back down to its target of 2% until sometime in 2025. Remarkably, after a rapid and blistering round of more than 5 percentage points of rate hikes, the overall economy has remained resilient. Unemployment remains at historic lows, and robust numbers of job creation have persisted despite broad consensus that the U.S. would slip into recession in 2023. To continue avoiding an economic slowdown, the Fed may start lowering interest rates before inflation has fallen all the way back to their target. Markets bounce. Celebrating what seems widely viewed as a confirmation of the conclusion of the Fed's rate hiking regime, markets rose in the run-up to the Fed's decision and in the wake of their announcement. After briefly entering correction territory of 10% below their recent highs, stocks have rebounded, bouncing by more than 15% since October. Markets have now risen by 35% from their lows in October of last year, regaining nearly all of their losses from the peak of January 2022 reached prior to the Fed embarking on their current hiking campaign. Looking for cuts. While markets have seemed to cheer what may be the conclusion of an historic rate hiking cycle, investors will still need to continue adjusting their outlook for the timing of upcoming rate cuts. There is a wide gap between the amount of cuts markets are expecting next year versus what the Fed has penciled in themselves, with the Fed projecting 75 basis points of cuts in 2024 compared to market expectations of about twice that amount. Markets have continually pushed back their expectations of when cuts are coming, having initially expected them to be made by this year. At some point, market expectations will converge with the Fed's own projections, either by markets adjusting to rates staying higher for longer than they currently expect, or by the Fed moving to cut sooner than they expect, possibly spurred by downbeat economic data or an acceleration in the fall of inflation. Thank you for listening to Markets Demystified from ESOP Advisor, LLC, where we relate investing to personal money management. Visit us on the web at esopadvisor.com, that's AESOP advisor.com, or call us at 940-268-4161. The preceding information is not meant as individual investment, legal, or tax advice. ESOP Advisor, LLC advertisements are for informational purposes only and are not recommendations to buy, sell, or hold any asset. All investments involve risk, and the past performance of a security or financial product does not guarantee future results or returns. While diversification may help spread risk, it does not assure profit or protect against loss. ESOP Advisor LLC does not provide tax or legal services.